Begin our normal disclaimer to state this is for education use only. We're not soliciting you buy or sell a particular instrument. If you do so, you're doing that at your own risk. All the information is owned by EII Capital Group, which is part of ichimokutrade.com. You cannot basically copy or distribute this information without written permission from EII Capital Group. Today we're going to be using eSignal for all charting purposes. Reason why is we're trying to get a global view, and that's the best charting platform we see out there that could give us a view for the entire global market. Okay, here's my contact details here. You could email us or contact any of our office locations worldwide here. Okay, so let's go and let me pull up eSignal now, and let's start going through the global markets. Okay. Now, I'm going to start in North and South America and then kind of slowly proceed over to Europe and then go to Asia. And then what we'll do is we'll cover some commodities and stuff like that. Very first thing I want to talk about is the U.S. stock market, of course. And this is the monthly chart of the E-mini S&P 500 futures. A lot of institutions worldwide judge the U.S. market based on the E-mini. We will cover the other future products too, specifically the small caps, which is the Russell 2000 in a minute too. So you could see here, if you guys are not familiar, we do use the indicator Ichimoku for all our charting purposes. In order for something to be bullish, the price right here has to be above the cloud and above the green line in order for it to be completely bullish. Okay. You could see here on the E-mini S&P 500 futures, we've been in a nice bullish trend here. And you could see that we've respected this red line here, which is basically a support resistance for 9 bars, so 9 months. And we really haven't gotten below it at all. So we really have not experienced a long-term pullback at all. I know a lot of people think we have, but we really haven't. We had a little beep here, but we kind of came back and closed at the end of the month right at the top. So we kind of haven't done anything. And you could see here for the last couple of months, and if you look at the last 6 months, we've just been consolidating a little range here. A lot of people think now we're due for a major correction. If you look at this pattern here, you really don't see any of that anywhere else. If you look over here, notice how price was close to that green line here. The green line's still far away here. So this price action that we're seeing the last couple of months consolidating is nothing that we've seen in history up to this point. Okay, so if you feel like there's some past pattern that's repeating itself, it's not really doing that right now. But right now, we are still very bullish. We'll remain bullish on a long-term basis as long as we stay above this green line on a monthly basis. The moment we get below the green line, that's when it starts getting into a counter trend where we know it's going for a major pullback. But right now, there doesn't look any signs of a major pullback as far as long-term is concerned. Let's go to the weekly time frame. On a weekly time frame, let's zoom in. You can see that we're consolidating here. And if you look at the consolidation range, this is pretty much it right here, is this level. It's kind of getting shorter and shorter and shorter. Before it was down here was a support. Now it's coming up here. As far as on the resistance side, we're kind of right at this level right here. So if you look at it, we're kind of ranging between this level of 2050 and 2123 is the range that we're going in right now for the E-mini S&P 500 futures. The moment we close outside this range, that's the high probability that we're going to have to go out there. So in order for us to be bullish and continue on this bullish trend, we got to close above this level here to keep on going up for a bullish trend. Or if we close below here, we will basically indicate that we're going to enter a short-term major pullback, which we really haven't experienced yet. Okay, that's the weekly chart. Let's quickly go to the daily chart to see if it gives us any clues of what we're doing. And you can see from the daily chart, really nothing at all. And you could see, remember we talked about this cloud here, you could see price basically going above the cloud, below the cloud, above the cloud, below the cloud. And this is continuously seems to be happening, and you could see this has been happening for months. So this is a range that we've been engaging in for the last couple of months. And let me take this here and just kind of move it down to this support right here, which kind of represents everything a lot more accurately here. So you can see from March, well, from the beginning of February, we've been entering this range here, and that's the range we're entering right now for the E-mini S&P 500 futures. As far as for day trading, scalping, a lot of people do. One of the things we used to do is on Twitter, we used to show a lot of the levels for based on the 240-minute, but you could see in the last couple of months, these levels are starting to get destroyed. But if you still look at them now, there is a level now that's being developed. So this can be used for swing trading slash day trading E-minis if you're doing that on a daily basis. And these are the two levels right now. And you could see we're at a major resistance right now. So really today what we're going to be looking for day trading slash scalping for the E-minis is looking for bear setups as long as we're below this resistance here. And we're going to start looking for bear setups to get down to this level here, because this is our swing trading zone right now that's occurring. Okay, and then you could see that here. And if we go down to a 30-minute, you could see that too here. Okay, so right now we are looking for bearish trades as far as day trading is concerned today, as long as price is below this resistance level. Of course, the closer we are to that resistance level, the lower the risk that we're going to have. Okay, now we cover the S&P 500 futures as far as futures are concerned. Let's cover the NASDAQ too. Reason why is the NASDAQ's been a nice bullish run here, and you could see here on the weekly time frame, this is what the NASDAQ looks like. You could see it like a little push up here, so it doesn't look like a smooth consolidation pattern as the E-minis, but because you could see this is a small climb going up. So the NASDAQ is a lot stronger than the E-minis right now. So if you are doing pairs trading, something that we talk about in the Options University, I would sit there and go long on the NASDAQ and go short on the E-mini S&P 500 futures, or maybe the Dow or the Russell, and that would be a good pairs trade where you're basically playing percentage moves. Okay, so this is the NASDAQ. You can see the NASDAQ here. As far as support resistance levels are concerned, I would say this is the support for the NASDAQ right now, and this is the resistance right now for the weekly time frame for the NASDAQ. Let's go look at the Dow futures here. Here's the Dow futures, and you could see this is a lot weaker than the E-mini S&P 500 futures and the NASDAQ. The Dow is. The reason why is it didn't hold that green line at all. So this is a lot weaker. So this is more bearish compared to the other two indexes. And here's your levels right now. So you have a resistance level here and a support level here. This actually is engaging in a major pullback, whereas the other markets in the U.S. have not. So this is weak compared to the other two. And then let's look at lastly, the Russell, which is representing the small caps. And you could still see this is a little stronger than the Dow. So if you look at all four of the markets from the Dow, the NASDAQ, the S&P, and the Russell, the NASDAQ is leading the U.S. stock markets being bullish right now, and basically the Dow is showing the weakest. So if you're doing pairs trading, I'll definitely do something towards going long on the NASDAQ and basically looking at short for the Dow futures. Okay, so that covers the U.S. side over there. Let's now traverse and let's go over to Europe. The biggest one that we want to look at is going to be Germany here. So we're going to look at Germany, and you can see Germany here. We have this outlined already with support resistances. Germany is ranging between these levels here of 10,809 and 11,810. So it's basically ranging between those two levels, and we've been marking this off for a couple of weeks now, actually a couple of months. We've been posting this on Twitter and also in our newsletters. This is just ranging between those two levels, and you can see it basically bounce off that resistance, come back down to the support. When we get back down to the support here, we will look at the lower time frames to see if it's going to hold. If it is, we'll sit there and go back long here to go back up to this level here. But we are short until we get to this support level here. Once we get there, then we'll evaluate things, and based on what we see on the lower time frames to determine if it's going to basically bounce up there to come back up to this top of this consolidation, or will it sit there and break out of the support for the first time to get to the next support level. But right now, Germany, it is bullish, but it's bullish consolidating in between these two ranges right there. For our UK people that are online, let's go ahead and cover the UK market, and you can see this is one ugly pattern here for the British market. And you could see here it was consolidating, finally broke out, and then it sat there and came right back into this consolidation pattern, which is not good at all. So it had a chance to go bullish. It didn't do that at all. It came back into this consolidation pattern. And the fear now I have is that if it breaks the support here, this possibly could start a bearish trend because you're starting to see signs of bearish momentum coming into this market. So this is one to definitely keep watch of. If we sit there and close below this on the weekly time frame, then this does have a potential to keep on going down. Okay. So that's that one. Let's cover Greece, the famous Greece. Actually, right here, you can see Greece here. And let's zoom this out. You can see it's bearish trending going down. The green line is right here now. So as long as we still stay below that green line, this is bearish. We have marked off two supports, which are basically from the past, which is 967. That's the one we've been holding. And the next level is going to be 854. As long as we stay below this green line here, we do have a high probability getting to this 854. But really, this is something we really don't want to play right now. But this is bearish, consolidating, slowly trickling down. But that's the way it's going right now. Okay. I think we covered all of the major ones in Europe. Let's go across. Let's quickly look at Saudi Arabia, and then we'll go across to Asia, which has been the major talk of the town. Conversations everywhere. This is a Saudi Arabia market here. We went below the clouds, so the sentiment changed to be bearish. It seems like we have a high probability of retesting this low. We broke this minor support last week here at 85.64, and we do have a high probability of getting to this 81.40 level right there. If we get to this level here, there is high probability we will break this, and there can be a possibility where we can come back all the way down here to the 72.50 level. So keep an eye on the Saudi Arabia market. This thing is starting to look very bearish. The key level is going to be 81.40. If we break that level here, then we do have a possibility starting a bearish trend. If we hold this level here, then there's high probability we're going to consolidate between 81.40 and 91.86 for the Saudi Arabia market. Okay, and one other one we'll cover in Middle East is Dubai. You can see Dubai is a lot more stronger than the Saudi Arabia market. It is consolidating, but you could see its levels are here where the resistance level is right there, and if you look at the support levels right there. So this has not turned bearish yet compared to the Saudi Arabia market. This is just consolidating here, but right now we are bearish until we get to this support here at 37.37. Once we get there, we'll see exactly what's going on. Okay, let's go over to Asia. We'll cover everything from North Asia to Southeast Asia, and then back down to Australia. Okay, so this is the China market. One of the things is that everyone thinks that the China market was crashing. If you look at the move here, and this is something we've been putting on the blogs and everything out there, you could see this is a nice bullish trend here. This retracement right here came all the way down to here. If you guys believe in Fibonacci, take a look at this whole retracement level here. And if you look at it here, this major move down was only 50% of the big upward movement. So I don't know why everyone thinking the Chinese market is completely in a bearish trend. It's not. It only retraced 50% of this huge movement going on. This is just a pullback, believe it or not. Okay. Now, after this pullback, has not gone back up to retest the high. It's deciding to consolidate, and that's kind of the situation you're in right now. Is it's consolidating. So let me sit there and remove all the drawings and draw in fresh here. If you look at the Chinese market, the major resistance is here. In order for it to retest this high, it's got to sit there and break above this 44.83 level. Okay, its support, it basically is right here right now. Okay, so those are the levels. There is a minor resistance here, and that's that level right there. However, the Chinese market is still bullish no matter what anyone thinks, so I would not sit there and think about going short at all. These are the levels that you have to sit there and conquer. The big level is going to be here. If we break above this, believe it or not, we have a high probability of retesting this high, and the Chinese market on a long-term basis will continue to keep on going bullish. Okay, so don't listen to the fundamental news out there, what's going on. Listen to the charts, because that's basically where people are putting their money with the actions. And you could see here on the daily time frame here, we got below the cloud. We went back up here, retested our major resistance, bounced off there, and then came down here. At these 2 points right here, all these couple of days here, this market, if it was bearish, should have followed through retest this low and kept on going. It did not. So there are some really, really good bullish signs in here for the Chinese market to possibly reverse and go bullish again. Okay, so this is still a pullback, a bullish pullback, whether everyone believes it or not. So please take a note of that. The second market I want to cover is Japan. And the reason why is not a lot of people are talking about this market, but this market is still bullish. Okay, so Japan is still bullish, and you can see it's still bullish. It's holding on right now, and you could see the support level here, and you could see the top of the consolidation patterns right here. So the Japanese market right here is still bullish and will remain bullish until we break the support here. Once we do that, then it'll go back down to this green line, which will be stabilized somewhere. But this is still bullish. So really, really, if you're looking for bullish opportunities anywhere in the world, Japan could be another possibility outside the U.S. Okay, let's go down. We're going to cover sporadically, cover some others. Let's cover the Indian market real fast. I do see a lot of people from India on the call, so we'll cover the Indian market. Here's the Indian market here. We did blog this on Twitter here. The Indian market is bullish. It went for a major pullback to here, and now it's holding the support level here at 82.90. This is the Nifty. As long as the Indian market holds the support right here at 82.90, we still have a high probability of retesting this high. However, we got to this resistance here and we have not broken it. That's not good at all. That means this thing's consolidated between 85.53 and 82.90. The more it consolidates, the more bullish momentum it's going to take out. It really needs to, this week or next week, break this resistance level and start going to this level here. If it does, this market will sit there, retest this high this year, and break it and keep on going higher. We're kind of waiting to see exactly what's going to happen here. You could see prices starting to fall along the top of this cloud, which is what we're looking for this week. If basically we're looking for it to go bullish this week and next week, if it doesn't, then that's basically showing us signs that it's more bearish than bullish than right now. Okay, next we'll cover is Australia. Here's Australia market on the weekly basis. Let me zoom out some. You could see it was bullish here, went for a major pullback, went bullish, and then what it should have done was hold this level right here. Okay, well, those two levels really. One was right here. If it held this level here after this bullish momentum, then you could see it was going to be very strong. It didn't do that. Came back here, didn't hold that at all. That's not good at all. This right now is on a verge of, believe it or not, going into a bearish trend. And instead of going into consolidation, if it sits there and breaks this major support here, this market does have a basis for going bearish on a long-term basis. So I'll be very careful in the Australian market right now going long. Any stocks. If you do, make sure you stick to the risk being low and make sure that you're doing pullback trades, not breakouts at all. But you are at a very critical level here, whether this market continues to consolidate or enters a bearish trend. So you're at a major level right now on this market. If we go to a monthly time frame, let me go to a monthly time frame here, and let me show you what it looks like on a monthly. We're just waiting for the charts to come up. And you could see this level here, this support level is a multiple time frame support on both the weekly and monthly. So if we get below here for the first time, the Australian market will engage on a monthly basis in major pullback. And it possibly can, believe it or not, come all the way down to this 48.71 level, which is over a little less than 1,000-point move, but that's a little drastic here. I know it is, but you can't. That's the next support level down here. There's a lot of minor ones that it could stop at, but remember, again, just be very careful here. I'm hoping it holds this level here. If it does, then the Australian market will continue to go bullish. This is the thing I really hesitate in going bullish again is that we held this resistance level here, which is a major resistance level over here. We should have sat there, held this support right here at 55.73, and then started going back up, and we didn't. So this is starting to show some major bear signs. Okay. Lastly, we'll cover in here in Asia is New Zealand. This is not a lot of people talk about this market. I don't know why, but New Zealand's been on a tear, and you can see this big, nice bullish trend here, and you can see it's still holding up on a monthly basis. Let's go back to the weekly, and let's look at this here. And you can see on the weekly time frame, it's consolidating right now, but it's still a nice bullish trend. There's a major support right there for the market, and there's basically the major resistance in order for it to resume the bullish trend. So we're looking for pullback opportunities here to go bullish. Once we get to the support level here, we're going to start looking for bullish opportunities here in order for this level here to hold. Okay. Now we covered all the global markets. We got about 8 more minutes left. Let me come back up here and let's start going through some of the commodities. Let's go through crude oil first. Crude oil, of course, is a major talk. This is the chart I've been posting on Twitter. We are at a major support right now, which is at $42.30, $42.30. And if you look back here, these supports are basically coming from this price action here, which is dating back all the way back to the beginning of 2009. Okay, and that's where we're getting these support levels here. And there's 2 support levels that we're at. Right now, we're at one major one right now. In order for this crude oil to start going bullish, right now the resistance level on the weekly is 52.41. Okay, and so let's look at the daily and see if we're going to maybe hold this support level here. Okay, if you look here on the daily time frame, the daily is still very strong. Looks like right here last week, basically last week it basically held the support right here. This today we're starting to go below it. We got to see this week if it's going to follow through and go below it. If it does, we're going to head down to $36.87. If it doesn't, then we possibly could sit there, consolidate around this area of level, or maybe bounce off there. A lot of people are expecting a hard bounce when crude oil gets to the bottom. It doesn't necessarily have to be that way. We can consolidate and then make a movement up. So don't look for that either way. Okay. Now, last time we predicted the bottom, not by looking at crude oil futures, but looking at this ETF here, XOP. XOP last time kind of gave us a very big clue on crude oil bottoming. And you could see here, XOP got to a major resistance here of 36.86. Held it and bounced off there and got to this level here. Now, in order for XOP to even have any chance of it going for major pullback, it's got to sit there and break this resistance level at 40.65. It did not do that at all. So this right here is bouncing off there. Its support level now that we're closely monitoring is going to be these 2 levels, 38.04 and 36.86. If it holds these support levels and then comes back up to here, it will have a high probability of breaking it to go higher. And that's kind of what we're looking at in order to see if crude oil is going to reach a bottom. So we're looking between XOP and also the crude oil futures, and we're looking at also the volatility for crude oil. So there's 3 different products that we're looking at in order to see if any one of those gives us a clue in order for this thing to bottom out. Okay. Now, that's gold. That's crude oil. Let me talk about gold real fast. So let's go to the weekly basis for gold. You can see gold here was slowly trickling down here, and it basically broke a major support right here, which is right around there. Let me mark that off. Right here, it broke that consolidation pattern by basically going below here, 11,039, went below it here, and now it looks like it's trying to retest this same support. It's now a major resistance. Gold will be bearish as long as it holds this resistance level. If it breaks that resistance level, then the bearish signs for gold are going to pretty much be gone, and it'll probably enter a consolidation pattern or may even try to go bullish. However, we think with high probability that this level is going to hold. If it gets up to there, it may hold some minor resistance levels. If they do, it's going to be strong bearish. but we're looking for 1139 for gold to at least come up to this level by October. And at that point, we want to see exactly what's going to happen at that point. But right now, we're not looking at any bearish trades or bullish trades for gold. We're waiting to see exactly what's going to happen at this point right there. Once it gets there, then they'll be able to tell us if this is really true bullish or bearish. I understand it did break down, but that breakdown doesn't mean anything. It could be a false breakdown. We've got to see some follow-up action after you break a support in order to sit there and enter a long-term position. Okay, that's gold. Let's quickly look at the dollar. This is being I love this from a fundamental point of view because everyone thinks the dollar is going to skyrocket to the moon. However, if you look at the weekly basis here, dollar came all the way up to this level here and then stopped, and basically it's consolidated. It had a chance here to follow through and come up to retest this high and keep on going. It didn't do that at all. So this thing looks like it's going to consolidate for a little while. The major support for dollar is going to be this level here, 955.39. And if you look at the resistance level, in order to retest the high, it's going to be somewhere right about right here. Okay, so this is your resistance level right there. So you're basically having dollar ranging between these two values here. Until you break out, you're not going to know. If it breaks a support, the dollar is going to enter a major pullback as far as the weekly is concerned. If it breaks this resistance, we got a high probability of retesting this high and then keep on going. So that's where we stand with the dollar. Okay, and the last one I want to talk about, not a lot of people talk about this one. Let me see if I can remember what it is. This is something that we've been posting on Twitter week by week at the beginning of this year. Last year, we could tell based on bonds, early prediction of which way the U.S. stock markets were going. January, things kind of shifted, and it seems like the VIX was an early indicator on what's really happening to the stock market. So if you've been following me on Twitter and everything, you've been noticing that I've been watching the VIX very closely. And these are the levels that we've marked off on the VIX. And remember, the VIX is an inverse relationship to the U.S. stock market. So if the VIX is going down, that means the U.S. stock market's going up. If the VIX is going up, that means the U.S. stock market's going down. Okay, so you could see here, every time we approach this support here on the VIX, at that point we're looking for bearish positions in the U.S. stock market, because we're predicting the VIX to get to the support, bounce off there, and head to the next resistance level. When we get to resistance levels here, this is when we start looking for bearish positions in this U.S. bullish positions in the U.S. stock market, and the reason why is the VIX is going to go down and the stock market should go up. So these are levels here, and you could see very accurately how this has been helping us here. And you could see we're kind of ranging right now in the VIX between 1190 and 1599. So every time the VIX hits one of these levels, you could sit there and start looking for, you know, short-term positions in the U.S. stock market, whether it be with stocks or with options or so forth, and timing it with the VIX. And you could do really, really well by using this as a indicator to kind of help predict which way the U.S. stock markets are going. Okay, if you don't believe it, go watch some of the newsletters that we have on Ichimoku Trade. We talked about this, and you could see some of the past ones, and you could see exactly what levels and what we're talking about with the VIX product there. Okay, so this is kind of, so basically in order to gauge which way the U.S. stock market's going, we look at the VIX, we look at the dollar, we look at the E-mini S&P 500 futures, and then we also start looking at, and I'll quickly bring this up too, bonds and treasuries. So this is here, this is basically looking at the T-bond futures here, and you could see here that this is bullish here. The support levels here is right here. Resistance level, next one's going to be here, and then right there, those are your levels right here that you're looking at as far as the T-bond futures here, which is I think this is the 30, I can't remember. I think this is the 30-year or the 10. But basically, this is still bullish here, but we have not found a correlation right now between the bonds and the U.S. stock market. The correlations we see right now that are working are between the VIX and the E-minis. And that's basically what you've been seeing me blog about over and over and over. Okay? So that completes our global market update. Hope you guys enjoyed it. If you guys have any questions, feel free to email us here. Also, provide us some feedback on what your thoughts are. Reason why is this is the first time we're doing this, and we want to make sure that we're improving on the process over and over and over. Okay? For everyone, I see we got over 500 people on this call from around the world. So good afternoon, good morning, and good evening to everyone.